The stock market is going down, 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 at least for today. Nobody can predict the future. I personally have had my money on the sidelines. But the important point here is the stock market can directly affect the outcome of the Russian economy and make it collapse. That's the US stock market. I'm going to show you some facts and figures, some actual numbers to back it up. My name is Mark Biernat. I'm an economist. I'm reporting from Poland. I've got some facts and figures for you. I've got some numbers, and my claim is this. Here's the first chart. It's a little bit low tech, so forgive me. I purposely wanted to try low tech. The first idea here is, I don't know if you can see this, I've got a little Monopoly man there. Whether it be a weather anomaly or the stock market decline, you have exogenous variables that can bring Moscow to bankruptcy, to end Russia. So let's talk about that. We're going to take a look at this. And we're going to look at some stock market declines in the past. And the first one and the most notable was the Great Depression. I don't know if you can see these numbers. The Great Depression, you had an 87% stock market decline. The Great Recession, 57%. COVID shock, 34%. Oh, a little foreshadowing here. 34% down. WTI was down 50%. .com down 49%. So it's very naive to think, with valuations at dizzying highs now, that this market will go on forever. It will adjust. It will correct. The question is when. And if you saw my little blurb there about WTI, what is the butterfly effect? What is the contagion? What if the stock market goes down? What happens to WTI? And you know WTI is West Texas Intermediate. We're using that kind of as a benchmark and obviously as a proxy for Ural, which has a steep discount, Ural oil. So I'm starting to bridge the connection. Let's look at the stock market and look at the numbers. Let's first see where this stock market is. Okay, let's use the S&P. The S&P at 6,734, it's in a range around there. WTI at $60 a barrel. Let's say the average cost of, without sanctions, everything good, it's $45, for the Russian oil to make a profit, really actually lower. But let's say 45, range 40, we'll use different numbers here. The shutdown point is if WTI goes to 34.7, I calculated in my model. That happens, Russia might as well just give up because they actually have to shut the oil wells down. Even if you don't have a profit, you can still run the wells. A shutdown point is even running at a negative loss to keep it going. There's a point where you want to shut it down. And, right now, let's say it's $15 a barrel profit. Sanctions are being applied by Ukraine. Keep on pounding them, Ukraine. But this is an exogenous scenario. Okay, let's take a look at the first scenario. The first scenario is an array of stock market declines. Let's see how these shocks, these stock market declines, are going to affect Russian profitability. Now, this is, again, a back-of-the-envelope calculation. Don't, you could take this under a microscope and find issue with this. I was actually changing the model as I was creating my little graphs. But let's take a look at this. You've got the S&P. Let me get into some better light. If it's a 0%, drop in the S&P, let's just assume a 33% nice fat profit. Let's be conservative and give them that. You have a 20% decline, you're already at a 12% profit. WTI, 20% decline in the stock market, this correlation is pretty well known, brings you down to 45.6 WTI. Wow, that's amazing. Don't look at the front lines, look at the US stock market. You have a 30%, it goes down to 38. You have a 40%, you have a 50% drop. WTI could be at $24. I know that's a stretch, but that's a stock market crash. And it would bounce up. That's a temporary anomaly. But let's say it even settles at 30% down and, WTI, these are all conservative figures. That's a 4% loss. They're ready to stop the war. Bye-bye Russia. I could sing it again. Maybe I'll make a song and release it. I don't know if you guys can see this. So the stock market alone has a huge effect on the, obviously, demand for oil. That's not even the supply component, which Ukraine is pounding. The demand for oil is very important. That's what drives the price. It's a demand-driven, vast supply, but right now, at least in the short and intermediate term, demand drives the price of oil, and the price of oil drives the Russian economy. Demand goes down, Russia sinks. Here's the next one. This is stocks plus weather. In the last video, I see YouTube threw up a little bit of, weather pattern, warning, sign, whatever, global warming, refer to the UN or whatever on my last video that I talked about the weather. But I'm just talking about the weather, the price of oil, and the stock market drop. You see these correlations. Worst case, S&P drops 4%. The 3% increase in the Celsius temperature, you've got a WTI sitting, it's hard to believe, at 26.52, and that's a 50% loss on every oil barrel they pump. I don't know if you guys can see that in my little charts. So my point being, there's many variables here, endogenous and exogenous. It's not simply just the front line. It's actually the other things that determine who's going to win. My claim is Ukraine will win, Russia will lose, and might not even exist. I don't know if you can see this. Happy days are here again. So whenever you're looking at a model, you've got to take all these numbers with a grain of salt, but there's clearly a correlation between, and whatever the numbers are and how poorly I've done this model, whatever the numbers are, it would be a hard argument to say that oil prices, WTI, black gold, Texas tea is not correlated with the stock market because of demand. We're going to get a drop in demand if the stock market goes down because of a negative wealth effect. People have less money. They don't spend as much. They don't drive as much. They don't take as many vacations. Game over. WTI goes down. Ural price goes down. Euro price goes down. Russia goes down. That can happen with the stock market, but it also could happen with warmer weather. It feels pretty nice out today. Taking a stroll in the park. And there's other exogenous variables that feed into this. Either way, Russia will lose. You have to be patient. I know you guys are sitting on this day by day, but there is no way that they're going to win. They're burning capital goods. They've got a one commodity resource cursed economy. Contagion is everywhere. Supply shocks, demand shocks. Not to mention, Ukraine are sending flamingos there. I'm a Florida guy. I wish I brought my flamingo shirt to Poland. So, again, Ukraine will win. Watch the stock market. It declines. This AI bubble valuations are at dizzying high. I've never seen them this high before. What if we have a 30% correction? I think Russia will have a 100% loss. My name is Mark Bernard. I'm a monetary economist. Have a beautiful day. Thank you very much.